When it comes to your financial safety, there are a lot of things you can do proactively on your own. But then when we talk about some of the regulatory bodies, the government agencies, what do they do to help protect investors and just people with their finances? In this video, I'm going to break all of that down. Hey, what's going on, everyone? This is Maoli Vodi with Financially Present, your one-stop shop for financial and investment education. And in this video, we're just going to talk a little bit about some of the financial regulatory bodies that help make it somewhat of a safe investing and banking environment. So there are things you can do on your own, obviously, but there are some government powers that keep this area somewhat safe. So you can imagine them being the referees or the commissioners of this whole financial landscape. And their job is to make it more fruitful and more competitive and liquid as far as some of the markets. So we're going to talk about different agencies, 5 in specific, and we'll talk about what they do, some scenarios as to why you would even need them, and how it helps keeping things just so that you can go about your business. Okay, so the first organization is the Financial Industry Regulatory Authority, and we know them as FINRA. This is the regulatory body that brokerage firms like Charles Schwab, E-Trade, Ameritrade, all of these different companies, they technically have to pay fees to, but this regulatory body has the ability to create the licensing standards for the individuals that work there at those brokerage firms. So when someone says they have the SIE license, or they passed that exam, or they have a Series 7, Series 63, all of those different designations, normally they're enforced by FINRA. They say that, hey, if you want to operate in this role, you need to have these certifications. They also have a hand on how fines are imposed on these organizations. You know, if there's any wrongdoing that occurs at these organizations, FINRA steps in. They can impose fines. They can even ban individuals from working there. So they also keep a record of any wrongdoings. If there are complaints filed on specific individuals or specific brokerage firms. So basically for FINRA, they are a self-regulatory organization, and they oversee the brokerage firms and their representatives, all under the SEC's authority, and we'll get to the SEC. A scenario where you may see FINRA step in is maybe there's some complaints that happen or occur at this organization, or maybe there's an individual that works there, or you notice that there's some funny business going on with your investment account. You could file a complaint with FINRA and see where they can take it, and they will help be part of the investigation. Just keep in mind that the brokerage firms have to pay fees to be a member of FINRA. So a lot of times you wouldn't even invest at a brokerage firm if you didn't see something like a sign stating that they are a member of FINRA. And that just means that they have a policing body over them. So it's more of that quality assurance effect. So now let's talk about the SEC. That's the Securities Exchange Commission, and that regulatory body is above FINRA. Okay, so imagine a publicly traded company on the stock exchange. Maybe they didn't disclose some material information and it affected your investment decision. So now for some reason, maybe you lost money or you weren't able to make a gain on something specific. And now you need someone to complain to or file a complaint to so that something can be done. So the SEC has the ability to fine companies as well. They could issue cease and desist order. They could do what they need to do to help maintain transparency. And this is why you see a lot of news around the SEC and what they want to do with the cryptocurrency market. They want to make certain things more available and more regulated so that they could have a hand in that, because technically cryptocurrency is not a registered security like stocks and options and other investments. So crypto is not under the regulatory authority of the SEC. So remember, the SEC, they can issue cease and desist orders. They could impose civil penalties, so fines essentially, or they could even make people serve jail time. And then they have the ability to suspend or ban individuals from the securities industry or participating in the industry. Next, we have the FDIC. That's the Federal Deposit Insurance Corporation. So technically it's not a government body, but it's related to the government. That's the best way to say it. But easily, they are the number one reason people are able to trust in this banking system, because they provide insurance for the banks. And if you're banking somewhere and they say they don't have some type of signage that says they are a member of the FDIC, then you know that they are not insured, because technically all banks are required to display that. And they will insure up to $250,000 per account type, basically, at that bank or under that business. And that's what allows you to know that, hey, your money is technically safe with them. This is aside from how banks also will invest your money in order to gain interest, right? But at the end of the day, the FDIC is what enables people to trust in the banking system. The idea here is that if the bank itself ever goes south or sideways, or just, we have situations like Silicon Valley Bank, right? If that bank goes out of business, the FDIC will step in place and try to find someone who's willing to buy up that bank and assume all of the responsibilities. And if they can't, they will swoop in and make sure that they are insuring people up to the deposit limit, basically. But that is a lot. That's what enables people to trust into the banking system. Next, we have the SIPC, that's the Securities Investor Protection Corporation. And this is a nonprofit corporation where essentially they do the same thing as FDIC, except they do it for brokerage firms. So companies like a TD Ameritrade, a Schwab, a Fidelity, E-Trade, and so on, they have insurance of $500,000 per specific account type. And of that $500,000, $250,000 covers cash, the rest securities or investments, basically. And to be clear, SIPC does not cover investment losses. It's not like, hey, if your stock went down and you're upset and you want to file a claim, it doesn't work like that. This is if the brokerage firm itself is insolvent, meaning they can't pay their bills, they don't have enough money to operate, they're essentially going bankrupt, then SIPC insurance will do something similar as FDIC would do. They would just do it for brokerage firms. So they would find a brokerage firm that could possibly buy this firm that's going bankrupt and make sure that the investors have what's owed to them, basically, because this allows people to be more trusted or trusting in these brokerage firms. So it helps maintain that level of trust and security in the securities industry. So generally, just like how you wouldn't invest or put your money at a bank that doesn't have FDIC insurance, you wouldn't put your money at a brokerage firm that does not have SIPC insurance. It's the same thing in two different environments. And lastly, there's the Consumer Finance Protection Bureau. So this is a newer agency founded in 2010. And for example, let's say you were given a loan and there were some unfair practices that were involved with this loan process. The Consumer Financial Protection Bureau would get involved, and they may be able to help you seek damages that you wouldn't be able to get with, let's say, FDIC or FINRA or SEC, because it wouldn't fall under that. So this agency helps and can enforce fines. They recently requested or ordered a company called Prehired to pay $30 million in relief to student loan borrowers that were promised a job placement and were ordered to pay back money for some guaranteed job placement. So basically, there are some aspects in the financial landscape where additional protection is needed for consumers, and that's what the CFPB offers. You see, they basically ensure that these institutions are treating customers fairly and that they're using sound business practices to operate. It just keeps the environment much safer. And again, this is still a new agency, but it goes to show you that the environment continues to change, and sometimes you do need some support from newer agencies in order to make sure that they're making markets safer. So there you have it. Those are some of the big players that are helping keep the financial markets and consumers safe in this industry or this world that we so regularly put money around and work so hard for. And I'd love to see what are some other ways you think consumers need to be protected. I'd love to know in the comments below. So make sure that you're keeping yourself safe using your own financial protection, but then also being aware of the agencies that help make the environment safer too. If you have any questions, let me know in the comments below. And until next time, stay present.